Steve, what's up?
Hey, Scott. Thank you. Steve and I are pulling a switcherooski on you guys this week. I'll be doing the hosting for the most part, this trade of the week, and Steve's going to fill in for me on Thursday. So, but I am joined as a sidekick today by Steve. Hey, Steve, how's it going?
Hello. It's going. Happy Tuesday.
Yes, yes. Happy Tuesday. And thanks everybody for joining us today. We hope we will not disappoint. We try not to. So hopefully we'll share some good insights today, so you can take them and profit in the marketplace. This is the trade of the week, and let's get on to the disclaimer here. Guys, just keep in mind, Steve and I will be talking about some setups today and maybe some buy points and sell points, but all this is educational, okay? It's nothing that we say or anything that you see should be construed as investment advice, okay? If that's what you're seeking, you might want to look for somebody like a stockbroker, an RIA, somebody who can act in that capacity legally. So, but we're going to have some fun and go over some ideas for you. All right, Steve's slide up here at the top says you're not alone with trade ideas, and I can't think of a better way to say that. We do know that the software is very powerful, but you're also going to find out that it is also very intuitive, and that is our job, is to show you how intuitive it can be. And there are many resources here at Trade Ideas. The one on top there, the Traders Room, is a top resource. It's moderated by Barry Einerson. And guys, this is open to everybody. You do not have to have a TI subscription. It's free for everyone. You can go in there and watch Barry navigate the market using our software. It has 500 plus traders in there, usually some really good ones. So if you're not in there, get in there. It's a great place to hang out. We have webinars every day, Monday through Thursday, in the 5 Eastern time slot, okay? This is one of them. Obviously, this one's not up there. It's more of a subscription service, but you do have, well, I'm not going to go through all of them. You can see, for the most part, it's Jamie, Steve, or myself kind of flipping around and hosting these. But on Wednesdays, we do throw our CEO Dan Merkin and Brad Williams at you for a great Q&A demo. Good place to come to see what bells and whistles may be coming around the corner. And then Friday support session. Don't forget that. That is basically a scheduled 3-hour event on every Friday at 11 a.m. Eastern time. It's myself, Steve, Jamie, and Sean. We're in there to answer all your questions. It's a great place to come at the end of the week if you didn't get everything answered. So, guys, you can see it's really, we do not leave you hanging here at Trade Ideas. We don't pass you a software and say good luck. We're here to help you, and let's not stop there. Let's talk about TI University. Okay, we've been this, goodness gracious, are we about going close to a year yet, or a long time? And the feedback has been great. Yes, Steve, you about to say something?
Yeah, it's been probably almost a year.
Yeah,
close to it. Not quite.
Yeah, not quite. We probably got a couple more months to go. But anyway, what this is, it's scheduled classes Monday through Thursday, all at 12 Eastern time. And as you can see there, they're kind of graduating classes. We start at Monday on 101. And then go to 201 on Tuesday, and then 301, and Jamie rounds it out with 401 on Thursday. And these are hour-long curriculums, and then we open up the last 30 minutes for Q&A. So, like I said, guys, the feedback has been incredible. People that are going through this class are walking out of that class. I say walking out; it's a virtual class, of course, but having a real good feel for the software by this time. So please, this is something you have to register for, so do not forget it. Even if you've been here for a couple of months and you feel like this could be of good use to you, you can still take it. Just register and come on in. All right, this is a slide that Steve always has in his stack, man and machine combined. So in other words, Paul Tudor Jones once said, no man is better than a machine, no machine is better than a man with a machine. And boy, this has it really fits with what we do here at Trade Ideas, okay? Because obviously this is a very powerful machine, but it works best with a trader and somebody who can harness that power and put it to use. And that's why we say this is a machine versus, machine and man working together, generating ideas, and of course, you are very important and an integral part of this system here. All right, let me move on to the agenda for today. We're going to go over the market recap. Steve's going to handle that for me, and I'll circle back around. We'll touch on the Holly recap a bit, go over some ideas in that. The trade of the week. Steve and I were rooting it on today to possibly trigger. It came close, and we'll talk more about that. And this is going to dovetail into the last two of our trade of the weeks, and we're going to talk about how setting price alerts and buying pullbacks, especially when a market gets in the kind of tape we're in. And we're going to give you ideas. I'm going to take you through an example of maybe going through an alert and just patiently going in and setting a price alert and letting it come back to you. And then if we have time, I'm going to talk about our score. I've talked about this before, but I'm writing an article right now, a score versus the IBD composite rating. I believe it's called Smart Select. Yeah, so I'm going to give you a really good idea of how they're different. All right, so Steve, with that said, you want me to pass it over to you, or are you going to grab it? All right.
Pass it. I'm a better catcher than
a
thrower.
All right.
And ta-da! All right, welcome to my desktop, guys. I blew up the daily chart here, those that come to the webinars frequently, I don't have a whole lot to add to what we talked about yesterday, but there is one more day of data in there, and there's a couple things of notice. So I'll rehash it a little bit. These orange lines you see in here, these were not drawn recently. These have been valid for a while. You go back to these levels, look at that: resistance, support, resistance, more support. There's a reason for these lines being where they are, and they still continue to have meaning and validity as far as I'm concerned. So back here, this is the day we broke the market. We dipped onto that top pivot line. It could have acted as support. The following day, got a little nervous, and then we just fell through all the fire breaks. And this is the day we lost, I think, the bull market for now. Can we get it back? It's possible. We're trying. But on the big move down, giant volume, of course, and then what starts to come to mind immediately is the declining 10-period simple moving average. This is the average I use on my daily charts and my 15-minute intraday chart. It's the line that shows me if the momentum is still intact or if the momentum is subsiding. And when we have a break like this, it was not surprising to see the bounce back up into these averages. Numerous days, the average was corralling the price and never allowing it to close, maybe a tick or two above during the day, but the way I use that average is we're looking at closing prices. And then so another big dip down here, and we got into real oversold territory, and we're kind of on an oversold bounce with declining volume, as you can see. But on the good side of the card, the scorecard here, we have a couple things going on. First and foremost, that gap that came out was in a nasty downtrend, and there's a name for that. It's called a pro gap. And so it can be a real neck snapper to the people who are leaning heavily short on leaning on that downside trend line. So we get a pro gap, but the most important thing was that it gapped above and held and closed. At the end of the day, it closed above this declining 10-period average. There's no color in the candle, but that's okay. The closing price told the story. And then from then on, the most important thing is to continue to close the price below that average, and we have been doing that. And in doing so, you can see this average is now beginning to stop, flatten, and slightly turn back up. These are the beginning mustard seeds of a possible price action move that tells us that this was nothing more than a healthy correction because the market needed a shower, without a doubt. We got our shower, but are we going to build on it and continue the trend higher after washing out the weak hands? Because that's what's required, kind of creative destruction along the way. So again, today was another nice close above, way above that moving average, and I mentioned yesterday the next hurdle was going to be this declining red 20 period. Well, Today was a good plus sign for that. We closed above it and traded above it all day. Not only that, we traded above the second pivot line. I'm going to continue to keep these pivot lines in here. Look at how they showed support on this day and support on this day and kind of resistance the last couple of days. So we squeezed up out of this little trading range. And today was a constructive day. Now, albeit on very low volume, it doesn't matter. The price is the closing price is the closing price. And so we're running right smack into this flattening 200-day moving average. This is also going to be pretty big technical resistance. There's still a lot of work to be done after a dramatic sell-off like we had. But to recap, a pro gap up and then holding these moving averages, holding these pivot lines, closing, not giving away selling at the end of the day. These are all constructive, but there's still some issues coming ahead. Now, this is a giant week of catalyst. There's a lot of earnings. Matter of fact, I think I saw the market up a little bit after market. I don't know, I haven't paid attention to the earnings today, but a little bit of an uptick and settling back. But we have earnings this week. I think we all know there's a big election today. And there's also a Fed meeting that was moved from Wednesday to Thursday to accommodate today's elections. So there's a lot of catalysts over the next 3 days that could move us out of this congestion area that we're in and maybe help us define and pick the next direction. What do the bulls want to see? The bulls need to close back above this 200-day pretty soon. Institutions like to look at that. The bulls do not want to have these moving averages give back up. So just knock them out one at a time and see if we can build on it. But again, I think this is going to be the next 3 days. We're going to have some catalysts with the Fed and the elections. So that's the S&P 500, the benchmark that really everybody's looking at and tells the biggest story with the breadth of 500 stock names in there. Then we have the NASDAQ Qs, which is tech heavy, a little bit different today. They've been under fire with Facebook and Google and Amazon. Have been a little bit weak lately, and they've been kind of dragging this NASDAQ down. So NASDAQ is not leading at the moment, but on the plus side, it's remaining above its declining 10-period moving average. A few more days of that, and this will start to flatten out, and maybe it can build a base on the heels of another pro gap. The whole market basically did it that day. So they've trapped the shorts with that overnight pro gap, and sideways action is constructive until further notice. But still, you got the 200-day moving average flat as a board right there right above us. So that's going to be a major technical headwind as well. Now the IWM, the Russell 2000, which led and started the cascade down, has recovered a little better. It's been above its 20-day moving average for the last 3 days and held it again today. Nice sideways action. Sideways is good for the bulls. That's definitely a strong suit. But right above, we have a major pivot line, and we've got the 200-day there as well. And again, these 200-day moving averages are significant. The institutions, the big money, they really kind of play off of these. And then lastly is the Dow. Nobody really cares about the Dow, but it's only a few handfuls of stocks and gets kind of led around by the nose from the other indexes, but it's doing okay as well. It's above its 10, it's above its 20. Look at it's above its 200 as well. So there's probably something to be said for that. This is the only of the 4 averages, the industrial, and it includes our transports, trucking and shipping, but it's above its 200. So take it back. We should care about that. It's at least trying. So the Dow's looking the best of all of them. Take that for what it's worth. But that's pretty much all I got. We only had one more day on the heels of yesterday, but big catalyst coming up tonight and tomorrow, and the Fed on Thursday. So we'll see what happens.
Thanks, Steve. Yeah, there's not a whole lot I'd ask, could add to that. I mean, you did a really good job. We could, who knows? I mean, we got all this stuff coming out tonight, and like you said, for the rest of the week. But that was a good analysis, and I agree with you pretty much on everything there. Just not a whole lot I can add to that. So
alrighty.
I will take it back, and let's see here. There we go. All right, you got me?
Yep.
All right, let me get my screen back up here. And now if I can only remember what's next. Oh yeah, Holly. Yeah, there's some days where we can kind of pound our chest on Hollies, and there's some days where, it's just, I want to be careful. I mean, we can look over here into our channel bar, and we can see they all finished up in the green. That you had a risk off for Grail, which, you know what, I looked at Grail today, and only 3 trades, and they were all up on risk off, and even though it was only 38 cents, uh, I have a lot of respect for what it did. Looking at the marketplace, I mean, here's the spiders. I mean, yeah, we had a little burst there at the end in the closing minutes, but other than that, it was kind of a mosh pit, all day. It always makes it tough on any strategy you're using. And then you look at the risk. Look at the risk on here in Neo. I mean, geez, Steve, look at that. I mean, you talk about a histogram. Just a
Well, yeah, that goes with what we were saying.
yeah.
Neil's going to have big days and big down days. A lot of distance, a lot of
Mm-hmm.
distance between the up and down, and more volatility and more back and forth.
Yep. And there was a lot of trades in Holly 2.0 today, so and even though it finished up risk on, it was a tough one because there were a little bit of that's Grail, and just 3 trades, risk off, all profitable. Even though there were some really good trades in Holly 2.0 today, it was tough because you did have a lot of stop hits, and that always makes it tough. Uh, and once again, let's take a look at the histogram on 2.0, and it looks better on risk on, but a tough start, for the first early minutes of the day, first couple hours of the day, I should say. But nonetheless, like I said, it's a good day on risk on, but today I just know how difficult it would be to when you get action like this, a sudden drawdown close to lows. It's tough to stay in risk on mode, especially when your stops are getting hit. So it makes for a tough day. I mean, not saying it was totally bad. I'm just saying it would have been difficult to reap these kind of rewards, using the Holly. Now there's some days where they're no-brainers and she just kills it, and for the most part like I said, we've tracked her using the S&P as a benchmark like all funds do, and over the long run, yeah, she's been really killing the S&P. But there's days where, like I said, I'm not going to sit here and blow smoke because I know how difficult it is when you start having a lot of stops. There's some days where she'll fire off, 15 to 20 trades, not have one stop, and they all just work beautifully in risk on, or most of them, the majority of them. But and listen, I'll tell you one thing I did notice, like in 2.0, if I sort by entry time, when you start seeing out of the gate, 3 longs fired, followed by 3 shorts, another long, some more shorts. Anyway, you start seeing this kind of bifurcation to the long and short side. It's like, then I ask myself, well, now this one did come with a lot of short strategies today. You can see it was just as many short strategies as it was long. So that tells me, by her firing off long and short strategies, that all of these filters were being met, events were being met, and so a lot of times it just leads me to believe, okay, there's no directional bias here. She's going both ways. Both of these strategies are hitting. I'm going to back off a little bit because there's no, dominant direction here. And so we always like to say, guys, there's more than just good trades that you can find in Holly. Can be a great barometer for what's going on in the market just by, what you're seeing in the different segments. Holly Neo. Now Holly Neo, I think, had a lot more long strategies today, so that kind of threw it off a little bit. Yeah, only a couple of short strategies. But how did Holly Neo do? No, that was the one I was showing earlier, where it's just take a look at risk off histogram. Yeah, that's better in my opinion. But anyway, still a mess. All right, so if you guys have any questions about Holly, feel free to drop them in the questions panel. We'll be happy to answer them. I just don't want to spend a lot of time going over trades today because it was one of those days. I don't want to pound our chest on trades when there's an equally bad one out there. But anyway, yeah, just ask your questions in the questions panel if you have one, because I'm going to move on to the next topic, which is going to be interesting. And I think what it is here, let me just pull up my little screen here. Where'd it go? There we go. Trade of the week. Yeah, I see. I'm not accustomed to doing that, so I never have that in there. Trade of the week. This is going to be fun, Steve.
Yes, it is.
Yeah. How do you pronounce it anyway?
Acacia?
Acacia? Okay. All right. Nonetheless, here's what we had, and this is very similar to the one we had last week, which was Trivago, where we suggested, let's not chase the action the next day, and let's wait for it to come back to us. And what happened is it took off that day, and if you chased it, you were buying up here, but if you were patient, it actually came back and touched and hit our target here in this Trivago. I don't want to spend a whole lot of time on this one. This one is still working beautifully, kind of setting up low, just keep waiting for this fast line, like Steve likes to says, and maybe goes sideways and lets the fast line force the action. But I wanted to, excuse me, bring this up so we can move forward, because we got this off the same alert, the Extreme Volume High-Low Pro. So let's pull up ACIA, and we were both looking at this over the weekend, and we said, wow, this had some really good volume. It broke out to a multi-year high, or close to it there, and we're saying, well, maybe this will act as some resistance and we'll bring it back down to the September high. And we almost got it today, guys. You can see how close it came. And I told Steve, because I remember when he was out last week, I remember watching Trivago, and every time it kind of got close to our trigger, it would bounce, and it would do very similar to what ACIA is doing today, and would not go down and tickle our little buy point there. And I think there's a reason for that. And there's quite a few people who follow the trade of the week. It goes out to many, many people. And if people are putting their buy orders in there, and the high frequency traders and algorithms are driving the stock down, or whatever, I shouldn't say they, for whatever reason the stock is driving down, and all of a sudden these algorithms see all those orders lined up, it could be backing up, hoping that these orders will just reach up and grab it. And looks like to me that most people are being patient and waiting for that price. But it's funny watching that price action, isn't it, Steve? We were watching it all day.
It's funny because we now know something that the rest of the market does, and it just kind of proves our thesis. You guys have been around for a while. I said about 8 or 9 weeks ago, we are no longer going to put out a hard stop loss market stop order, because what happened is everybody was taking it to heart, as they should have. But as Andy said, this is getting a little bit crowded, and all of a sudden we're starting to show up, I think, on the radar of some of these market making companies. You put order into E-Trade, Ameritrade, Schwab, what have you, especially Robinhood, that's where they're making their money off you. They sell your orders to Citadel and Virtue, these giant HFT trading houses, and they see the whole 5D chessboard that we don't see. So they know there's a wall of buying down there on Andy's screen, and it's like two magnets opposed to each other. They don't want to get near each other. There's no money to be made by HFT with all those buy orders sitting right there. Now, if they were sell orders, that's why we stopped giving the trade of the week hard stop order, because everybody put their sell orders in there, and that is when it gets lined up like a bunch of bowling balls in a bowling alley, and they can just knock them down and buy them back. And it happens all the time at the open, which is what I think is a good segue for Andy's possibility for tomorrow.
Yeah, thank you, Steve. Yeah, there's a good possibility, when we open tomorrow, that this thing will drive, and trigger, drive down and trigger, and could go, a ways past. I don't know, but I'm just expecting there's a good chance that it's going to trigger on the open. Now, because this is not a day trading service, okay, this is a swing trading service, the TOW is, and should you pull your order, that's up to you, but think of it in the backdrop of the market. If you wake up in the morning and the market is down 1%, one might want to pull it and try to get a better price. If the market's up, you might want to leave it in there. I'm not going to be the one. We present ideas, and if somebody maybe wants to go up and snag half of it today, I could understand that. I might have been tempted to do that. Say, well, I want it down here, but I'll buy half my position here and leave my other half, in for the original trigger. That's the whole idea. These are ideas. Want you to be patient, but you know, I can understand if it gets close and you're afraid you might miss it. Long or short. The initial order is to buy, Antonis, to buy at, I believe it was 42.75, right, Steve?
Yeah, 75.
Mm-hmm.
So it's a pullback buy.
Right, it's a pullback buy. We were looking at this on over the weekend, so it was up here around 44.83. Okay, and then we didn't want to chase, and thank goodness we didn't. If we just chased it here on Monday, we'd be in the hole about, you know, a buck or two, buck 50,
Oh, you know
whatever.
what, Andy? That also just bolsters my day and a half theory right there. We used to
Mm-hmm.
marvel all the time when a stock got its move, and definitely Acacia got its move. It had its earnings, had its powerful move, closed on highs. The second day, come in, opens strong, no pullback, pushes through highs, and usually about lunchtime on the second day, the short-term time framers start getting itchy and taking profits. So there's always been kind of a running joke: day and a half, get your move, do what you can to stay in there for a day and a half. So wasn't really surprised to see that action yesterday. So we're not going to be chasers. We're going to try and give ourselves a meaningful entry, which is the prior resistance from a few months back. But if we can just get those darn market makers to get within 20 cents of those secret lined up buy orders that only we know about. I mean, everybody else is looking at this. They don't know the Trade Ideas Trade of the Week has everybody lining up for buy orders there. But I can tell you the market making algos sure know.
Mm-hmm. Absolutely. Uh, So yeah, that's still in play. It's a good chance it may trigger tomorrow, so keep an eye on that one. And this is going to dovetail nicely into the next segment, and what it is. I'm gonna show you. I did a webinar. Oh, it's been a while. I probably should do this one again, where I think people could be much better traders if they would learn to not execute a trade without using a uh, uh, what's this thing called? A price alert. Thank you. A price alert. And what I mean by that is so many people get caught up in the emotion of trading that they just go and they buy or they sell for, you know, and they're not rationally thinking. And so a way that you can kind of prevent that is if you let prices come to you and be patient and use price alerts. And I guarantee you, if you just try forcing yourself, if you're day trading, I understand, and all of a sudden there's a breakout. Yeah, I understand. It depends a lot on your trading. But when it comes to position trading, whether you're positioning yourself for an all-day trade for 3 or 4 hours, or you're positioning yourself for a swing trade, maybe 2 or 3 days, or even a longer-term swing trade, I think people, it would behoove them if they would, instead of just, reaching up and buying, be patient. And especially in a market like this. And Trivago was a good example last week, and I think this ACIA is a good example for this week. You're not chasing it, you're being patient. The breakout has occurred, and now it's pulling back to your price point. So what I'm going to do, I'm going to go through this this multi-strategy alert here called Extreme Master Blaster, and it has different alerts. These are momentum stocks, whether they're hitting a 52-week high, 10-day high, all-time high. There's different strategies in here, and if anybody wants that, just shout at me and I'll be happy to share this with you if you don't have it. But what I'm going to do here is we're just going to go through and look for some stocks that we make and mark up, and just let the price come back to us and see what happens. All right, so let me just kind of go back to this morning. Let's see, and there was one that came out pretty early. This VSAIL extreme volume. Okay, this is extreme volume over $10. So this came out early in the morning. Okay, I don't advise anybody, trading, especially on a swing trading time frame, this early in the morning. But let's just click on it and see what we have here on the chart. All right, that's a nice breakout right there in VSAIL. Okay, above this, going back to October there, you can see it penetrated that red resistance line, and you can see this is on a multi-year high. And probably if I look over here, we are nowhere near its lifetime high. You can see that, but obviously position in the year range, it's breaking out. Well, in a market like this, it's hard to get breakouts to work, and a lot of times they will come back and test that breakout, especially if we get some red price action in the next coming days. So if you're not one to chase this momentum, this is where you have a nice point right here where it broke out from, and it also kind of marries up with this level over here. You know, just draw a markup here. And you can see there, you kind of got some nice support over here now, support here, and then you got this wick going back. So what I would do in a case like this is just come in here, this normal high, and just do kind of like we did on the trade of the week, create a price alert. You don't want to go short. Anytime you create a price alert below the current price, it's going to default to short. So you want to make sure you put it on long. Okay, and you could just call this, you know, pullback. Be simple with it. And we'll create a long. All right, so we have a price point there. Now you're going to go through here and see some things that are not that appealing. Like when I see something like this mile and I'm looking at it and I'm thinking, well, this is kind of, you know, it's kind of in a downtrend. You know, this to me is not that appealing, okay? It's in no man's land. Had a nice day today, but I'm not sure it's something I want to put a price alert in because it still has a lot to do to break this trend. You know, it would need to come up here above probably that moving average, the 200-day moving average. So I would just pass on something like this. What you want to do is find these stocks kind of like we found in Trivago and Acacia and move from there. So something like that, nah, I'm not all that interested in, but let's just kind of cruise up here and see if we can find something else here. And luckily I went through these prior. That to me is not the kind of price action I want to see on the first day. This has potential, but you know, those sudden moves up and then pretty much sold off and went flat, you know, I would rather see something like the last one I showed you where it finished strong on the day. But, you know, you could always put one in there if you wanted to and see what would happen when it got there. It's not something I would put a buy order in, but maybe if it got there and held and started to go back up. But I did find a couple of others in here. Let me see. Let's see. Let's go to GoGo was a good one. Let me see if I can find it. There it is.
My nickname in college.
Was it really? All right, so this is a nice one. You can see what's happening here. Look at this red line resistance. This is great that we provide this technology for you, because if you're sitting here looking at 4 or 5 months of worth of data on the daily chart, you're not seeing this resistance. But if you go back, now you're seeing the resistance back over here. And honestly, guys, I don't know. This one, I love the way it held up today on huge volume, relative volume, 8.64. But once again, this is kind of an ugly trend. I didn't go back and look at this earlier, but this is going to be one I'm going to set, and then I'm going to evaluate. Let me see what happens if it pulls back to here. Maybe get a good price there. Switch it to long. Just put in pullback and save. Now this is one where if it triggers, I'm going to watch the price action. I'm going to see it when it comes down, or if it comes down to this level, I'm going to want to see it stabilize, because once again, the longer term chart on this one is not very good. All right. In all reality, this is probably maybe one to wait to see if it goes through that resistance. But nonetheless, you can gauge it and judge for yourself. All right, let me go on up here to 959. I'm telling you, there was a lot of ones on this chart that just did not look good. Nothing like it did, you know, 2 months ago when you had these things coming through here. All right, there's one here called, there's GoGo again. I believe it's ONDX. There it is, or ONDK. Okay, let me see the long term on this one. All right, this is a little bit better. Okay, here's one where it's kind of getting away from is it didn't take out, you know, that monthly high, but you can see nice, huge relative volume, and it traded strong all day. So all day there were buyers in this thing, buying. Very strong candle today. Well, what I might want to do if I don't want to chase it, it could run into trouble up here, very much like the trade of the week, ACIA did when I showed you. Maybe runs into that and then it just pulls back. It's kind of tough to pull where you want to put your buy or your price alert, but I'm going to use a smart stop here because it has a nice, you can see it's kind of a pivot line right here. So I'm going to come in here and put in a price alert right here, long, and put it on pullback. Just a way, guys, to not chase. And the last one I think is Mosaic. Let me see. And I haven't seen this one this strong in a while. I believe it was going too far. Oh, MOS, where's she at? I bet I found this one on this one over here. I may just have to pull it up. You guys are going to have to trust me. Well, let's see, 1237. There's no 1237 in that one. All right, guys, I think you're going to have to trust me if I don't find it. There it is. All right, so here's Mosaic. Look at that. Year range, so that's a 52-week high, okay? Very nice volume, relative volume, almost 4 on a stock that does, you know, tons of shares a day anyway. This is a great example of one that's breaking out, okay? Broke out of that multi-year high there. So this is one where you might want to come in and just put a price alert in at this high to see if it comes back and retests that high. There's a good chance it's going to. Okay, so we're going to create a price alert right there, long for a pullback. And I think I'm just about there. It's kind of tough to see, but you don't have to be perfect on these things. Let me make it a little bit higher. There we go. All right, so guys, this is just a way, you know, it may come down and retest that October high, but I'm gonna use that high going back what I just showed you about 16, 18 months ago, and see if it comes back and triggers. Oh, friend, did you see Mosaic Extreme Master Blaster? I don't know why I'm missing that on there. Okay, my eyes failing me here. All right, guys. So this is, I'm telling you, in a market like this, especially if we, you know, run into the 200-day moving average, like Steve beautifully pointed out to you guys when he was doing the market recap. If we hit those levels and start pulling back, you may see a lot of these stocks that we just set price alerts in. Come back and test those. And even if they don't, you know, the market was kind of strong today, but look at what happened to this one. Boy, so you can still get those pullbacks. So let the prices come to you.
That Mosaic's a great example of how the 15-minute works, how the 10-period moving average works great on the 15-minute chart. There was 2 inflection points today, giving people a momentum entry if they caught it on Mosaic.
Oh yeah, look at that.
1, 2.
Riding the wave. Nope, sure was.
Especially that's I'm doing a one-on-one with somebody on Thursday. I need to imprint on this because this is the kind of stuff I want to show him. Gap up on strength, sideways, and the moving average coming to connect it. I'll take that trade every time.
Absolutely. Let's see, Mike has, is there a way to get Bollinger Bands on charts? Well, let's look. Right click, indicators, and no Bollinger Bands. Mike, you know, we have so much stuff going on right now, and I always remind people, you know, we are we're an idea generation company. Okay, this is our first love, and it's what we do best, is generating really good ideas for people. We've come a long way with our charts over the last couple of years, but you know, it's those things kind of get put on the back burner. I'm sorry, but hopefully your execution software provides you with charting that will do that for you. But it may come at some point. It just, I can't give you any ETA on that. I know we look to improve them in the future, but you know, it's in the back of the line, unfortunately, with all the stuff we have going on with Holly and all of our other alerts. All right, so the next topic, yeah, I wanted to talk about more. We haven't touched on this in a while, and it's the composite rating that we have, otherwise known as SCORE. And yeah, I'm doing a little article for our blog that you know is kind of compare IBD, Smart Select, I believe it's called, their composite rating, comparing it to SCORE. And let me just kind of it's not a whole lot I can show you. Unfortunately, I can't be bringing up IBDs. I might get in trouble if I start doing that. But there's one I really want to show you that I'll just show you right now. And I noticed it on yesterday, and it was on October 1st. And this will give you a really good example of how we score it versus how they score it. And it's HIIQ, because I was looking through theirs on Monday, and actually I looked after it fell apart. But this is an example right here. It's HIIQ on October 1st. IBD had a rating of 99. It was 8 on their list, on their leaderboard, their IBD 50. And I'm looking at it. It's not a bad chart. I mean, I can see it was nothing bad about it at this point. As a matter of fact, I did a top list and added, I configured it to where it was only showing HIIQ, and I went back to a historical date on October 1st at the close, and we had a rating of 83. So far below that's their highest rating, 99. So they had it with their highest rating. And we were nowhere near our highest rating of 100. Now, look what happened to HIIQ, and I see this all the time when you're looking at their score, and you have to be careful, because they use a lot of fundamental data. They use a lot of recent earnings reports. Okay, they use 5 metrics, and only really one of them are technical, and it's relative strength, and it's relative strength compared to other stocks, and also stocks in their industry. So you have to be careful with that, because I've known this. I subscribed to them forever, and at one point, and they'll have a stock like this that will give a real high rating, and you cannot just go blindly into it and just start buying it just because they give it a high rating, because you have to keep in mind, and this is why we focused mostly on technicals. We do have some fundamental data, EPS stuff, cash debt ratio stuff, earnings growth. We're big on earnings growth. So we have a lot of the same data. We just don't give it as much emphasis as we do our technical stuff, because to us, technical, it kind of trumps all the traders here at Trade Ideas, and we got a lot of them that have been trading for 20 plus years. We like to focus more on the technicals and the fundamentals. Fundamentals are great for finding intrinsic value. Okay, if you're looking for something looking for value or something like that, but it's more of a longer term time frame, in my opinion. I mean, I think I still look for value out there, like if I'm looking for an investment or something like that, if I'm looking to buy something and hold on to it for several years. But when it comes to trading, you really, if you're a trader on a shorter time frame, whether it be day trading, swing trading, or even swing trading for several weeks or months, I would stick to the technicals. When I'm comparing the research I'm doing right now into the IBD Smart Select and versus ours is more sensitive on shorter time frames. So in other words, if something falls apart during the day, it's going to reflect it immediately. I think they do now update their IBD 50 every day, because I noticed HIIQ is all of a sudden gone. It was at number it was number 8 yesterday. Yesterday it was at number 8, then all of a sudden it's disappeared from the whole list. I mean, I don't knock that. At least that's smart. I mean, the stock just fell out of bed for 2 days. But I think, looking at some of the things, a good example I get is Facebook, and I showed this on one of the webinars the other day. Facebook had like a 100 rating on this day right here. Well, immediately the next day when it falls out of bed like this, it fell down to like 57. And I think that saves people a lot of money, because if you're looking at some of these other composites ratings or analysts that are sitting here saying, oh man, this is a buy, get Facebook down here at this price, 180, that's a buy, and it's probably why it bounced back up. Everybody thought it was a great buy, but look what's happened to it since. It's dropped another 30 points. And even more, a few days ago. So I pride ourselves on, and we pride ourselves on reflecting sensitivity in the score. In other words, if a stock breaks down through certain moving averages, we're going to reflect it. A stock may go from a 98 to an 82 or 3, pretty quickly. We're letting you know that, hey, maybe this is not setting up as well as it did a few days ago. So Another thing too about you got to be careful about, fundamentals versus technicals. Okay, fundamentals are backward looking. Okay, they're looking at past data. I know you could argue that, well, technicals are doing the same thing. Yeah, you're right. We will talk about the footprints in the sand, but technicals, by looking at the footprints in the sand, I think you can. How's a good way to say this? It's just a better way, for. I think it's a better way to find or to get a better idea of where a stock may be heading versus looking at the fundamentals. Obviously, don't you agree, Steve?
A better litmus test.
Yeah, exactly.
Yeah.
Exactly. And looking at fundamentals, it's gonna lead you to a higher probability of occurrence, if that makes sense. Okay, so fundamentals, man, I can't make anything. Nothing I can look at the fundamentals and tell me what the stock's gonna do the next 2 or 3 days. You can't do it. But technicals you can. You can get a real good idea of what the probability of occurrence is going to be over the next several days. And I think, to me, fundamentals are for investing, okay, and technicals, if you're a trader, technicals are for in trading. Yes, David says E-Trade provides great charts with any and all conceivable technical indicators. So there you go, whoever asked about that. Yeah. Let me check into E-Trade.
The external linking can be a solution to get those Bollinger Bands if you have a good brokerage charting platform.
Absolutely. But comparing, just really quick, if you look at IBD's 50 and you look at our top 50, you're going to see, to put this in a nutshell, you're going to see much better looking charts on our and that's done on purpose. Now, remember, we do include fundamental data. Okay, so a chart can look really, really good, perfect, be hitting all-time highs, and still might have something in the low 90s. Okay, if it's not if it's not meeting those fundamental data points that we require, yeah, it's not going to get a 100 score. So, but at the same time, I think for the most part, if you're going through these charts on our composite rating, and you have something set up like this, where the composite rating has to be over 90, you're going to see some really good looking charts. Okay, so ours is more time sensitive. I'm not going to knock IBD. I know they do very well with that IBD 50. A lot of people who are investors, or they find stuff on there and it does good. But if you're a trader that needs to see a quick reflection in the score, I can't think of anything better than our composite rating, because it's real time. It'll adjust during the day. All right. And Winfield says Trading View. Yeah, I've heard some good things about that, Winfield. I have. All right, guys. So we have some time here. So if anybody has any questions about anything we discussed today, we can go back to Holly. We can talk about the composite rating. We can talk about buying stuff on pullback. But if not, I'm just going to go ahead and bring Scotty in here, and he'll walk us out. We've gotten close enough, I think, to that time. Oh, let me go ahead and do that. That's normally Steve does that. Yeah, I've never done that, but I shall do that. Let's see. I'll share these price alerts. See if I have any other that are working. I'll go ahead and show this one too. This is run. I think maybe I'll go ahead and share that one. This is one I think that solar has kind of got a move lately. Never mind. First Solar, they got a bump on some China noise the other day. What did JKS? It probably turned around to. Yeah, I'm not going to share that one. I'm going to share these ones I did today. Well, you have ACI. Let me go ahead and share that all. So what I'm doing, guys, for those of you who are in here kicking the tires, I am going to share these price alerts. Okay, so I can just copy this cloud link. Okay, and I can drop this into my chat window here, and everybody who has a subscription to Trade Ideas can just grab those, and it'll automatically set their price alerts for them just by loading that link there. Winfield, the pick of the week we discussed earlier. It hasn't triggered yet, but if you weren't here, it's ACIA, and it's to buy the pullback at 12.75, 42.75. Oh, no problem. It's this one right here. It came close today, but we were laughing because it just it probably saw all the buy orders and was backing off. Let's see. Oh, you're welcome, Waleed. Thank you, friend. I appreciate it. I appreciate it. Well, all right, guys. If there's no more questions, I'm going to go ahead and bring Scotty in here, and he's gonna walk us out. And hang on, he will have. There's a nice discount going on right now. If you're not aware of it, come back in and listen to Scott.
Yeah, thanks. A couple items on the way out. We had that great conference on the 20th. There's going to be some more content coming out of it soon, but for right now, you can watch all of the speakers at trade-ideas.com/summit video 2018. So you can watch the whole event in its entirety and jump straight to each of the presenters. Totally worth your time. You should check it out. We've got a podcast that comes out weekly. Make sure that you're subscribed. Just search for Trade Ideas Podcast wherever you listen to your podcasts, and add us as a subscription, and then you can check out the archives while you wait for the next newest one. There's a good ebook that both Andy and Steve contributed chapters to. It's 5 Ways to Win in a Post-BTFD Market, which we're definitely in this year. So just go to trade-ideas.com/ebook and put in your email address if you haven't gotten it yet. That way you can get the download link delivered directly to your email inbox, and you can grab that book, keep it on your desktop. We've got a discount code. Those of you that are not yet subscribers or want to do an upgrade, just use SAVEINNOV, all caps, and that saves 15% off your first month or year of Trade Ideas. So if you're ready to hop on board with the subscription or do an upgrade to premium, it's a good time to do that. If you have questions, email us, info@trade-ideas.com. You can also follow us on Facebook at facebook.com/TradeIdeasPro. Steve Gomez is Today Trader on Twitter, and also follow Trade Ideas on Twitter. But if you have any questions, info@trade-ideas.com is the best place to send it. It goes right into our help desk software and gets routed to the appropriate team member to help you out. Thank you, Andy. Thank you, Steve. We'll get a recording of this up later on tonight or tomorrow morning and send you a link. Thanks, guys.
All right.
All right. Thanks, everybody. Appreciate it.
Later on.